Hi, I'm Nicholas Yeo, Head of Equities, China. After a strong 2020 where MSCI China A Onshore Index delivered 40% in USD terms, 2021 saw more modest gains of 4%. January 2022 saw a rockier start to the year with an 8% fall in the index driven by lower expectation for Chinese growth and consumer strength. The macro backdrop for China over the last year has overall been unfavorable for market sentiment. This has included developments such as regulatory and policy announcements that affect certain sectors including internet, consumer, healthcare, and real estate. While the nature of many of the regulation is about creating a level playing field for business and supporting the well-being of households, it is the pace of the announcements that has unsettled investors. We have also seen rolling regional lockdowns to contain COVID-19 that have affected consumer sentiment, albeit industrial sectors have continued to function well and China's exporters have thrived. December 2021 saw the much anticipated default of property developer Evergrande, and it elevated concerns on potential knock-on effects to Chinese economic growth. We expect the restructuring of Evergrande to be a long, drawn-out affair, and it could precipitate more defaults among smaller, weaker developers. However, we are not anticipating wider contagion. Overall, we think China will emerge from this episode for the better, but there will be some short-term pain. In terms of our current positioning, there are 5 key investment themes that we believe will drive performance in the future and also navigate well the evolving regulatory landscape. Firstly, aspiration. Broadly speaking, we believe Chinese consumer-related names will generally fare well as China continues to strive for a more balanced economic growth for which the role of the consumer is center stage. Our focus on premiumization of consumption is also aligned with the broader goal of a moderately prosperous society by 2035, so we are well positioned for the continued growth of the middle class. Digital. This theme is aligned with policy objectives of self-sufficiency and localization. It is also aligned with improving productivity, lowering costs, increasing innovation, and helping to propel economic growth. We have a bias to software and include exposure to cybersecurity, cloud services, enterprise solutions, and software as a service. Green. This is a theme which is highly aligned to government policy on decarbonization and net zero emissions by 2060. Decarbonizing economies requires huge investments in renewable energy and storage, so China is set to benefit. Our holdings include batteries and related supply chain, renewable energy like solar, and a company focused on upgrading electricity grids for a renewable future. Health. We have an overweight to healthcare services, which includes companies that provide innovative research and clinical trial services that help to ensure that high-quality therapies are brought to the market cheaply and quickly. We believe such exposure have high alignment with policies that aim for the betterment of households. Wealth. This theme also aligns with policy objectives for moderately prosperous society by 2035. The financial services sector plays a key role in creating and protecting wealth. So where to from here? While inflationary pressures remain present in many major economies and monetary tightening is looming, this is not the case for China, where inflation is contained and monetary policy is becoming more accommodative. This reflects the efforts of policymakers to shore up growth. There will also be fiscal support in areas like infrastructure, both traditional and high-tech. There is also scope for improved investor sentiment as we expect tightening to slow in 2022 as the major announcements are already behind us. Otherwise, companies have been telling us that they are more confident of their margins improving in 2022 as inflationary pressure in China have moderated from a year ago. We also expect 2022 to be driven more by fundamentals, which is a good thing for a bottom-up investment approach. The A share market also has undemanding valuations with forward PEs of the MSCI China A onshore at 14 times, which is the same level as the beginning of 2020. We all recall that 2020 ended up being a very strong year for the China A share market. Overall, we think this presents a positive backdrop for Chinese equities in 2022.